A couple of minutes to get started. Okay, this is A201, so I just wanted to review a little bit, because it's been a while since we met because of snow, the effect on the accounting equation, what that means. So, does anybody remember the accounting equation? Right, so assets equals liability plus owner's equity, right? Okay, good job. So the way we spread that out, that usually means if I ask you, I tell you something happened, and I say, what's the effect on the accounting equation? So you have to tell me that either assets went up or down, or liabilities went up or down, or equity goes up or down. And because it's equation, there's got to be two effects usually. So if assets go up, maybe liabilities go up. And we talked, or we'll talk later about the owner put money into the company in exchange for stock. So the two effects on that particular transaction would be assets would go up and equity would go up, right? So that's the kind of way you'd answer it. So normally when we look at it, we kind of spread it out like this. So we've got a couple of columns for assets, a couple of columns for liabilities, and a couple of columns for equity. Okay? And for this only kind of works for this chapter only. We probably won't be dividing stuff up this way. Once we get to journal entries, that'll kind of overrule this. But under equity, we're going to put revenue and expenses, okay? So you should probably remember that every time we bill someone, if we sell something or do some work, that's going to increase our equity. So equity or revenue is going to be a plus, okay? And every time we incur an expense, like we get the electric bill or we hire labor or something like that, that's going to reduce our equity because that's going to take away from our net income. Okay, it's going to reduce that. All right. So having said that, we were taking a look at problem 178, right? Which I lost again. Oh, here it is. All right, it says the first item here, and this is, I'll just put this on problem 17A. Okay, so the first thing that happened, I probably should have skipped a line. Let's go over here. First thing that happened was what? The owner, Holden Graham, invested $40,000 cash in the company in exchange for common stock. So what specific accounts, what's one of the specific accounts that would be affected? We went through this last time, I think last week. So remember that one? Okay, so cash. So I'm going to put a column here for cash and say cash is going to increase or decrease. Go up or down? Increase. There's more money in the company, so cash is going to go up. Okay. And that's under assets. And what's the other thing that happens? Okay, stock is the other thing it's the other account that's affected. And stock is the equity account, right? So does that go up or down? Up, right, okay. So we have a $40,000 increase in assets and a $40,000 increase in equity, if we're looking in terms of the accounting equation, right? Okay. Oop. All right, what else should I say here? I should say that, just before we do another one, that the accounting equation actually is contained in the balance sheet. So the balance sheet lists all the assets and liabilities and owner's equity in the company at a point in time. So our balance sheet is a statement that lists all of the assets, liabilities, and equity. Okay? And the other statement we have is actually all under equity. It's the income statement. That's one we'll be doing a little bit with. The income statement has the results of operations for some period. Yes? You won't be. But you will later on. We haven't been able to work both computers together, so. What did I say about the balance sheet?
Yeah.
The balance sheet is a statement that shows all the assets, liabilities, and equities of a company at a point in time. And that is a quiz question, by the way. Liabilities and equities at a point of time. Okay. The income statement is another statement. We took a quick look, I think, at a couple of statements last time. The income statement shows the results of operations for a period, usually for a month or a year. So that shows us all the revenues and all the expenses. Okay. So you should probably look up, so just so you know for sure, what the definitions of, what the book says the definitions are of those two statements, okay? Okay. So getting back to this, our next transaction was what? The company rented a furnished office and paid $2,200 for May rent, right? So what two things or what two accounts will get affected, and then how does that affect the accounting equation? Can you think of one of the accounts that would get affected? Cash would decrease. Okay, so we said cash, oops, gotta put the cursor in. Cash would decrease 2,200. Okay, that's one effect, and cash is an asset. So we would say an asset would go down. Okay, and what's the other effect? Oh, it's rent, right? Yeah. So rent expense, so one of our expenses, rent, would actually go up, which decreases the equity, okay? Yes, trying to. Okay. So that's what's happening so far, and you can see so far cash is up, or assets are up the exact same amount that equity is up, right? All right. Okay, and the next one, did we do the next one? Company purchased $1,890 of office equipment on credit. So what would be one account that's affected by that particular transaction? Okay, and where does that go under our accounting equation? Okay, accounts payable would be affected. I'll just call it AP. It's under liabilities. Is that going to increase or decrease? It's going to increase $1,890. Hold on. Okay, and what's the other effect? Office equipment. So that's an asset. I'm just going to call it equipment. And that's going to go up or down? Okay, $1,890. Okay, that's the deal. Any questions? Nope. Okay, let's try one or two more.
I have a question.
Yep.
When we do like our expenses, because I know it's only going to be so long, and it's just like one big expense account. You want us to document it as negative, even though it's actually going up?
No.
You want us to like put it?
Just for this chapter. Just for right now.
Okay, that's what I thought.
Okay. Okay. Normally expenses are positive amounts. Okay, the next thing was company paid $750 cash for this month's cleaning services. Okay, so what's one account that gets affected? Cash would be affected. And it go up or down? Okay, it would go down $750. Okay, and what's another account that would be affected? Okay, expenses. Normally we'd list them all, but for this chapter only, we're going to do it this way. Okay, so that would show up this way. Okay, so we're showing $750 under expenses. All of our expenses in this, the way we do things here, are going to be negative. Okay?
Do you want it to be showing on the screen because it's not?
No, I will. I will in a minute.
Okay.
All right. I could do it this way. Can you see it now?
Yeah.
Okay. I forgot to switch the button. Okay. All right, let's try one more. Company provided consulting services for a client and collected $5,400 in cash. So what's one effect for that transaction? Okay, cash is going to increase 5,400, and what's another effect? Revenue, and which is under revenue, kind of under equity. That also increase or decrease? Increase 5,400. Okay. Okay, I'm going to stop this for